Also, let's go across to our analyst Siddharth Purohit, who is a senior research analyst at for equities and angel broking. Siddharth, thanks very much for joining us. Tell us, what do you make of the headline numbers which have been reported by HDFC Bank?
The reported numbers are certainly good given the current environment, and has been mostly in line with my expectations. We were expecting some moderation baked on the back of this demonetization, but numbers look quite impressive at the current juncture.
Right. And Siddharth, did you get a chance to look at the asset quality this time around?
I'm yet to see the details, but the headline numbers and on the bottom line front, what I'm seeing has been almost close to 15% kind of growth, I believe. This is really kind of decent enough.
The net NPAs have come in at about 0.32% versus 0.3%, which we saw in the previous quarter, and the NIMs are at about 4%. Those are the numbers which we are getting as of now. So what do you make of these net NPAs numbers this time around?
I think last quarter it was net NPA was 0.3, and so 0.32 is fairly stable enough. And if you observe last almost 7 to 8 quarters, consecutively, HDFC Bank has been able to maintain that similar kind of asset quality. It has not really deteriorated. There has been some sign of up and downs, but it has really not shown any sign of material deterioration in asset quality. And given this quarter, when there was a lot of fear that asset quality could deteriorate because of demonetization, if they have been able to maintain in this quarter itself, then I believe that it's a commendable job, and I don't see that it should deteriorate in the coming quarters as well. So I think numbers more or less looks pretty okay, and good enough at this moment.
Right. Let's go through the headline numbers. Siddharth, just stay online with us. The net interest income is at 8310 crores. This compares with an estimate of 8171 crores, and in the year ago quarter, the number was 7068 crores. So there's a bump up of close to 400 crores that we've seen on the net interest income front. The NPAs, as Siddharth also pointed out, it's at 1.05% for the gross NPA, and the expectation was 1.1. So it's mostly in line. This compares with 1.02. It had already scaled. The bank had scaled the 1% gross NPA number. On the net NPA front, it's mostly flattish, 0.32% versus 0.3%. Now, if you look at the credit growth, that will be important, because how much of an increment is expected to be there? It was expected to be in a range of 13 to 15%. And FCNRB deposits redemption was also one factor this time around, northwards of 20,000 crores. So that pressure plus lower credit growth was likely to impact net interest margins and pressurize that as well. If we talk about the profit number, that was expected to be 3788 crores. But this number seems to be mostly in line. If at all, on the NII front, it seems to be positive. Let's go through the segment-wise breakup as well. The treasury income has been flat on a sequential basis. So 253 crores, the treasury profit, this is the PBIT. This compares with 268 crores in the previous quarter and 513 crores in the year-ago quarter. So compared to the year-ago quarter, that has become almost half as far as the treasury profit is concerned. The retail book profits, 2308 versus 2074. So there's an increment of 300 crore in terms of profitability on the retail book, and the wholesale book has also it's gone up sharply. It's close to 2821 crores compared to 2000 crores in terms of the PBIT for the wholesale. Siddharth, coming back to you, what do you make of the wholesale profit as well as the retail book profit? Compared to its peerage, this seems to be quite a healthy number, right? And also the NII?
Yes, as NII front, as you said, NII has been decent. The one thing I was just looking at, the loan growth seems little lower than what I was initially thinking of. Loan growth has been close to, I think, 13.5%. So which I think has been little lower than what I initially thought about. But maybe it was kind of, partly due to, as we know, the HDFC is largely into a focus on the retail segment. The demand for retail also was little muted. So maybe that would have played a role in this quarter. But certainly this loan growth has started little bit moderating in the last 2 quarters. That's what is visible. So I'll like to say that maybe this is one of in this quarter, and maybe subsequent quarters we will see again rebounding. In the loan growth in the Q4 onwards. I think they should have been able to do little better loan growth in the quarter. Loan growth is one of and maybe a little disappointing. That is one point comes to my mind as of now. And the other part you said is other income. Other income for this quarter has been strong for almost all the banks, including this. I don't have the breakup of the treasury and this core fee as of now, but so far the other income looks pretty decent as of now.
Right. This time there was the pressure of the FCNRB deposits as well, right, Siddharth, which had to be redeemed?
Yes, it should be there, but on top of that, they have a deposit. Their deposit base, I think, despite that, I think it has been pretty well. I think 21%, right? So I think given this environment, 21% loan growth seems fairly okay.
The fee income was expected to lag loan growth as well. What was your expectation on the fee income front?
See, the fee income definitely, if retail advances and overall advances growth has been a little lower, then definitely fee income also will be on a little lower side. So it's quite, well taken. But I think I don't have the breakup of other income as of now with me. But I think there would be a component of treasury income should be there in the other income possibly.
Siddharth, the stock has reacted positively. The stock of HDFC Bank currently is trading higher by 1.2%. I was just looking at the interest earned figure. There's not been much of growth, and that's not the figure actually which has contributed to the higher growth when you look at the NIM. So the loan growth looks, it looks muted as of now. Overall, the asset quality is just about okay. What would be the major takeaway from the numbers of HDFC Bank by you?
Net, if you see bottom line number has been, almost in line with my expectations. Now, the good part is that, there has been no real concern about asset quality, even this quarter itself, when there was fear of some amount of moderation in loan growth and resultant, maybe some amount of deterioration in asset quality. That is not visible. It is rather has been very resilient. As I said, for last many quarters, a little bit of, rise in GNPA is well taken during this quarter. But more or less, I think it is a good set of numbers. And I think loan growth, which has marginally slowed down this quarter, could pick up in coming quarters. So I think there's not any negative developments and a satisfactory set of numbers for this quarter. And as far as valuations are concerned, if you talk about FY18 again, if they're able to bounce back to 20% kind of loan growth, then I think they should be able to, which I think should be able to, able to deliver 20% loan growth and equal number of bottom line growth. Then I think the valuations works out to somewhere close to 3 times FY18 book. So, which is decent enough given that, high quality of balance sheet. And I think based on that, the stock can be accumulated. And I see that, the stock should move up in the near term.
Right. Siddharth, the breakup of the treasury, the retail and the wholesale banking, the treasury PBIT is at 253 crores. Sequentially, it compares with 268 crores. And on the year ago quarter, it was 513. So that has half compared to the year ago quarter. But sequentially, it is stable. Retail banking is at 2,300 crores, the PBIT. And this compares with 2,000 crores in the previous quarter. For wholesale banking, that number is at close to 2,600 crores. And this compares with a roughly similar number, 2,600 crores in the previous quarter. Or I suppose it's, I guess, 2,800 crores. So this seems to be all right.
See, treasury income, I really need to check the details, but I think, more or less, as I tell you, that, total other income has been more or less in line with my expectation. There would be some up and downs in treasury income depending upon how much they would tend to book in any particular quarter. But more or less, total other income, I feel, has been satisfactory, I would say.
All right, so HDFC Bank actually that's got the maximum weightage on Nifty of about 8.1%, and owing to that, because the numbers have come good and the stock has reacted positively, the markets currently are trading at days high. You've got the Nifty which is now trading at levels of about 84.41. So clearly it looks like good set of numbers coming in there from HDFC Bank.
Right. And even, I mean, the stock is at the day's high, and even in the initial portion of the day, it was both HDFC and HDFC Bank that were contributing the most to the Sensex gains as well. Siddharth, in terms of the pre-provisioning operating profit, that has come in at 6,600 crores versus 5,300 crores. So on a year-on-year basis, and the other income is 3,142 crores versus 2,800 crores. So, I mean, the other income also has a major part to play here. Of course, almost around 300 crores is owing to the other income. The increment of the other income is 300 crores on a year-on-year basis.
Hello?
Yeah, Siddharth, I was telling you that the other income is 3,142 crores. This compares with 2,872 crores in the year-ago quarter. And the pre-provisioning operating profit is 6,600 crores versus 5,300 crores.
Yeah, as I told you, that other income growth, if you observe last almost 8 quarters, the trend has been in the range of 25 to 30% growth, which is a mix of both fee income and treasury income. But I think 25 to 30% other income growth is fair enough, and it has always been a part of, it has always contributed a large part of your kind of, total profit. So I think, as I told you, that, other income has been in line with expected. It has not been much higher than expected or below expectation. So the contribution to total profit for other income has been, I think, satisfactory for this quarter.
All right, Siddharth, thanks very much for joining and decoding HDFC Bank's third quarter numbers for us. Let's get the view of the other analyst then. Ravi Kant, who's a research analyst at IDBI Capital, is joining us. Ravi Kant, thanks very much for joining us. It looks like a good set of numbers. The stock has reacted positively. How are you reading into it?
Well, the numbers are indeed good. The profit is actually ahead of our estimates. We were expecting 38.3 billion. The bank has reported 38.7, so 1% ahead of our estimates. But overall, if I were to look at all the headline numbers as well as the balance sheet numbers, I don't think there is any disappointment so far. The numbers seem to be all right.
Right, Ravikant. And what about the asset quality, which has pretty much been in line with the estimates? How are you reading into the asset quality figures this time around?
So the way we have been looking at asset quality is, if you look at last many quarters, 8 to 12 quarters, HDFC Bank's gross NPAs have revolved in the 1 to 1.1% range. Occasionally, I think they have been dipped to even 95 basis points. So broadly, gross NPAs have stayed in that region. The provision coverage also has stayed robust and in the 70% range. So we are not really reading much into this. The asset quality is also in line with the recent trends.
Right. Ravikant, every bank had some watch list number which they were looking at for the provisioning and the NPAs. The reason why Axis Bank disappointed the street because they reported some kind of provisioning which was outside that watch list number. Any idea what was the watch list number of HDFC Bank?
I don't think there's any material watch list for HDFC Bank.
Okay. And Ravikant, what about the other numbers? If you look at the interest earned, actually, I was just looking at it. There's not been a major growth on that. We've seen about close to 70. It's actually the same on sequential basis. A very, very meager uptick coming in there. How are you looking at the interest earned numbers this time around?
Well, I think you need to correlate the key fund-based earnings to the balance sheet momentum, and balance sheet momentum has particularly been in the mid-teens. We have also been pointing this out that the growth this year shall be back-ended, and if we were to just compare how the growth happened in FY16, almost 50% of incremental addition to advances happened in the first half, more than 50% in fact. And if you compare that to this year, the growth has been in the mid-teens, and it's actually getting pushed to the last quarter, third quarter, as well as the last quarter of the financial year. So in that sense, the momentum in interest income will be slower. So what we need to look at is, one, whether the earnings efficiency is being maintained in terms of NIMs, which seems to be largely the case. Then we come to the absolute increase in interest income and interest expenses, which will be a function of balance sheet momentum. So I agree, yes. Over there, given where the balance sheet momentum is, the growth as such, the uptick as such, has been on the lower side. and that is also getting eventually reflected in the bottom line, where the profit growth is now in the mid-teens.
Correct. In fact, that's being lower for most of the banks. So Ravikant, what would be your call be on HDFC Bank stock?
We have a buy rating on the stock.
And you maintain that? Would you look to increase the target price?
No, we might not increase the target price because we need to adjust earnings to the back-ended growth that has happened this year, and because at the beginning of the year we had factored in a 20% kind of a growth, so the growth in average advances will actually be lower. That will also affect some to an extent the FY18 earnings also. So we are not revising at least the target price.
Ravikant, we'll leave it at that. No, thanks very much for joining us and decoding the numbers of HDFC Bank for us. The stock has reacted positively. It's a consensus view coming in there. Good set of numbers coming in there from HDFC. There you go. The stock of HDFC Bank is on your screen, up about 1%. Mind you, that's got the maximum weightage on Nifty of about 8%. The Nifty is also holding up to its gain. And with that, we'll wrap it up here on the show. Markets holding up firmly. Don't go anywhere. We'll be back and get you more market updates.